China is running in Sasol. Are we finally seeing a reversal pattern? In JC Direct this week, the Rand is stable, top 40 at all-time highs. We've got a budget speech next week, updates from Telkom and Santam. This is JC Direct, episode 618 for 12 February, recorded afternoon of Wednesday, 12 February. My name is Simon Brown. This podcast is brought to you by Shift Global and SPG Securities, their online share trading. Shift Global, for all your FX transactions, buy and sell offshore ETFs and shares, and of course, make and receive foreign currency transactions. We thank both Shift and Standard Bank for supporting our podcast. And let's start with Sasol. I have been saying forever and a day that at some point Sasol gets interesting, but first we need to see some reversal patterns happening. And are we doing it? Now it's Wednesday, it's early days, but Monday we saw the stock trade down quite aggressively, hitting lows of 72.58. This is the close of Tuesday on this particular chart. We don't have live pricing here, but we're getting a kangaroo tail, or are we? So what's a kangaroo tail? A kangaroo tail is where you've got a small little body and a long tail at the bottom of a sell-off, and it tells you that the sellers were aggressive, they got ahead of themselves, the buyers disappeared, and then suddenly the buyers came back, pushed it up, and that gave us the long candle tail. Now, we still got the Wednesday, Thursday, Friday close. This is a weekly chart. I want to look at weekly charts more than anything else. And let's be clear, if we go back to that candle there in 7 June, we could have called that a kangaroo tail. It didn't confirm the following week. It did confirm week of 21 June. Stop losses halfway down the tail, and well, ultimately we would have been stopped out. We were just at that resistance area. Any run here, I would say, probably goes to around about the 105 level. We certainly got some resistance there. I am not rushing off to buy at this point in time. We shall see how it goes. If we look at the daily chart, which I don't trade, that is much more of a kangaroo tail than what we see on the weekly. But again, there are some that we can go back in time and say, well, would that have qualified, and did that fail? And the short answer is, in often cases, yes, it did qualify, and then it failed. On the weekly chart, it is finally interesting. The fundamentals of Sasol, I have no interest in. I don't think there's a particularly compelling fundamental story for Sasol, but what there certainly is potentially a technical story, and at that point, I get interested. I get very interested in that regard. Let's see how it plays. So we have our first power hour next week with Standard Bank. It is on Tuesday at 5:30 p.m. Webcast, which you can get from, well, anywhere in the world. Or if you are in Johannesburg, grab a car train, grab an Uber, grab your car and your friends and family. Come along to the Standard Bank head office at Baker Street, Rosebank. We're going to be looking at exchange traded products, which is ETFs, actively managed ETFs, actively managed certificates. We've seen massive growth in the last year across all three. We also see some amalgamations of ETFs because Satrix, of course, took over a lot of the ABSA ETFs. We've seen the likes of ETF FSA, who've come out with their Balanced Foundation ETF. And we're also going to be looking at tax-efficient investing. And there's a couple of points around to it. The most striking, of course, is tax-free investing, Reg 28. Webcast is on, Power Hour rather, is on Tuesday. Budget is on Wednesday. Will we get any increases from the governor, from the finance minister, mixing up my important people in South Africa? Will we get any increases? We'll cover all of that. We'll go into details. It starts off really, really simple, and then we get more complex. So if you're a newbie, works for you. If you're a boffin, works for you as well. JustOneLap.com/events, more information and booking. I mentioned we've got budget next week, 2 p.m., my bad. 2 p.m. on Wednesday. I'm going to be flying down to Cape Town. I've got an event that evening at 6. And the question is, what do we expect from the budget? And truthfully, Probably not a heck of a lot. News reports this morning in Business Day saying that yes, revenue is looking good, but it's about 10 billion behind budget projections. We'll see what budget says in terms of the president kind of hinted at a basic income grant or universal basic income, call it what you will, in his SONA of last week. Will we get something around that? Funding for national health insurance, do we get anything around that? I mean, there's a lot of questions. It's not going to be an easy budget. We're not going to get VAT increases. We're not going to get tax cuts. If anything, we're going to get ourselves some bracket creep as per normal. So, I mean, I'm not expecting the lights being shot out at all from budget. That is not on the agenda, I don't think, in any stretch or way or means. But here's some fun. Is the Rand. So, last was it week Friday evening, I think it was Friday evening, Donald Trump went on, well, he didn't go on a more Twitter. He doesn't seem to have left Twitter or Truth or whatever it is that he plays on. The thing being is he now stopped all aid to South Africa. And a couple of things. It's only aid, and apparently there are some T's and C's. He blamed it on land expropriation, he blamed it on us taking Israel to the ICJ, and he blamed it on us being too close to Iran. I'm not going to talk on either of those. That's beyond the remit of this podcast. Point being is that the Rand is actually holding up. So this is the DXY. This is the dollar index, which has had a massive run. That level there at around just over 107 and change is hugely important. That is currently operating as support. Previously, it was resistance going back to late 22. If that breaks, we could see a lot more move. Certainly 104.5, and then maybe we get back to the 100. But the reason I'm bringing it up is that the Rand is strong. And here we are being threatened by the president of the most powerful country in the world. Not directly. I mean, he's cutting our aid. That's nasty. That's going to hurt. I suspect the likes of other BRIC nations, most notably, of course, China, to a lesser degree, India, Russia, if they've got any money, I don't know, can step into some of that. But here's the weekly chart of our Rand, and we're basically trading pretty much where we have been, which is around about just above that 18 level up to around the 1840s and 50s. We've been here since October 22. That is a fair bit of stability in our currency, even while we're getting threatened by the President of the United States. I have a theory here that says that we're going to be the center of attention from Donald Trump through to November. November is the G20 meeting. It is going to be held in Santam, Johannesburg. All the G20 leaders will be there. That, of course, includes Donald Trump. He's invited. Marco Rubio has already said he's not coming. A lot can happen in the next 9 months. But here's the thing. Trump likes to tear down global institutions. Think of the World Health Organization. Think of the Paris Agreement. He also likes to tear down internal institutions. Think of USAID and many others within America. That is sort of maybe not so much Trump, but certainly his team's thinking. And a lot of people in the background, people like Peter Thiel, people like Bannon and the like, they want to tear down the liberal democracy and rebuild it. Now, again, what they want to rebuild it into, a different podcast entirely. But the G20 is an interesting point, because at one point Trump can go there as the leader of the free world, and we put all of that in inverted commas, and sort of prance around as, the president of the United States of America. Trump loves that sort of thing. But he also loves tearing down global organizations, and that G20 is the likes of, Canada, France, and a whole bunch of others that he's not particularly very South Africa friendly with. So I don't know that he knows, and I certainly don't know that we know. We have no idea. No one knows. But does he use the G20 as another way to sort of tear down global institutions, exert his power, say the G20 is nothing when it's only the G19? And if that is true, we're going to get barbs between now and November like there is absolutely no tomorrow. He is going to be throwing stones at us repeatedly, which is why it was important to see the Rand holding fairly well and our top 40 trading at all-time highs. And as I am recording this, we are at new all-time highs. We're green for the day, up 0.68% on the top 40. So I spoke last week around how do we manage our portfolios in a Trump world. And a large part of it was don't panic. And that is what we're seeing here. What we're seeing is the don't panic. And it is, the traders and investors into both the ZAR and our local market are not panicking. They are undoubtedly keeping a close eye on things, but not panicking. But here, what is perhaps worrying me, and I need to switch charts and I need to go there. This is our 5-year bonds. And that is a humongous move. Now, that is the week of 27 Jan, which is the week after he came into power. That was the first time he threatened us. And we can see our bonds have basically gone from, let's call it 8.26 up to 9.13. Call that a 90-point move. That is humongous. That is absolutely massive. And that's costing us money. It absolutely is. Now, of course, if you're looking to buy a RSA retail savings bond, well, you're going to get a nice rate for March, but actually it's flat so far this month. But keep an eye on it. Point being is that we are getting hurt in the bond market. We're not getting hurt in the equity. The rand is holding on. If we can do some positive things ourselves, here's looking at you, Finance Minister, maybe, perhaps, we can get some things coming through next week. We had the Telkom update. It starts very bleak. Revenue up 0.9%. But it does then start to get a whole lot better in many ways. And that is that broadly, they're in a turnaround situation. And so far, the turnaround seems to be working a fair degree. They're getting data, fiber to the home. They are getting lots of mobile subscribers. I don't like telcos as a rule. I got to say there's not a heck of a lot that I see on the Telkom chart that says to me, this is thrilling. Yeah, sure, we had a bit of a break there at around 30. It's run hard. If we look at overview, forward PE of 8. I mean, that really is cheap by any metric. The median is 11.6. I don't know how much we're going to get on analysts' expectations and price targets. Let's have a quick squiz here. Trading below the average expectation of 40 Rand and 60 cents. We've got a strong sell, two holds, two buys. So a little bit split in that regard. Telkom, I don't like telcos. That is the honest answer. I just don't like telcos. So then let's go to Santam, and I got them right the first time on how to spell them. They had a trading update. Earnings per share 0 to 20%, but headline earnings 40 to 60% higher. That is looking like a whole lot better. Short-term insurers I like because they can reprice quickly, because every year your policy changes. What I don't like is, all the things, riots, global warming, floods, fires, etc., that are coming at them left, right, and center. Stocks, fairly priced, I suppose we could say. Okay. I mean, the forward PEs looking okay. The mean is, it's below means in forward PEs. Let's see what the average is here. It's one of those stocks, and currently at 390-ish. The average price is 395, 3 holds. I can't get excited about this type of a stock. I look at it and I think, look, it's been great. It's up almost doubled from those lows of 2022, but I really can't get excited about it. Here's a boring stock that I can get excited about, and that is Shoprite. We're seeing a bit of a sell-off across the RSA sort of consumer stocks, Mr. Price's, Fashini, Shoprite, etc. It's broken resistance. It could go down it could lose, go down into the 260s or there's about. This is a stock I do have held forever and a day. It is forward PE of about 19. That's not bad. The mean is 21, so it's a little bit cheaper than you would normally see it. I like Shoprite. Let's see what the analysts say. But I do think, it's one of those stocks that when there's sell-off, I look at it and I think, should maybe be getting myself some. 5 holds and 2 buys. Low price is 266. We're getting close to that. Average is 312. Certainly in the 370s, I'm interested, and in the 360s, I'll be buying. Not a lot, not aggressively. I hold a bunch already, so you don't need to necessarily get too excited around that. But I now want to move on to China because, China is it has been a perennial disappointment, and there are in essence two schools of thought around China. The one says that China is just not investable and you must absolutely leave it alone. The other says that China is got huge potential and going to do absolutely brilliant things, and we need to get involved and get a slice of the action on China. Now, there are two ways to get China. The one is buying the China exchanges. The other is getting into Hong Kong, which is essentially the same. You can see things are looking better. I still think that we need a little more. I mean, we're kind of at that resistance zone, maybe not quite there yet. We've seen the likes of Alibaba up 40% on news that they're going to be working with Apple. That certainly has helped the stock a whole lot. I'm watching close here. The concerns around China. Viv Govender will tell you Xi Jinping is old, out of touch, and a communist. You don't want anything to be doing with them, and that's not an unfair shout by any stretch of imagination. Others will tell you that yes, China has effectively, it's not even quite yet back at January 22 levels. You've had 3 years of nothing. You can see the massive jump here in September last year when they announced that they were going to be doing some stimulus. Stimulus was a bit of a wet rag at the end of the day. There are two local ETFs. The Satrix China, which is my preferred, and I know a lot of folks, as I'm doing this, are closing their eyes because they tried it and it was not a fun experience. This is, I think, pretty much since listing, but that chart is looking okay. And it's looking better perhaps than the actual China chart. It's at that resistance level. We can see the massive run up on that stimulus announcement in September. We can see it coming back. Suddenly China's like, there's something maybe that we should be getting interested in. This is the Signia China one. Is this correct? Yes, I've got the right one. And let's get all the data. There's not a lot of data here. I prefer the Satrix one. It is looking a little bit better on the charts. Neither of these, to be perfectly clear, are a low risk process. There are good reasons to say I want nothing to do with China, but there are also good reasons to say, hang on, you know what? China is cheap, and if you're comfortable with being invested in China, maybe it is the time. Not just yet, but maybe we're getting there. Let's have a quick look at Alibaba, because Alibaba has been absolutely running like crazy. It is ridiculously cheap, almost however you mention it. The stock has gone nowhere forever. Again, what we're seeing is lots at that resistance. We need something to happen at this resistance. Alibaba, price to earnings forward is 12.5. Price to book is 1.9. It is a cheap stock. It absolutely is. And if you compare it, a forward PE of 12.5. The other big techs are on markedly higher forward PEs. If you're comfortable with the China risk, I would add China to your watch list. I absolutely would. The average price is looking for 120, 26 buys, 8 strong buys, 7 holds, no sells, no strong sells. But let's be clear, we've probably been in that situation now for the last 3 years where everyone's been saying this is a lovely company. It hasn't done anything. There's also JD.com. There's bunches. There's Tencent, which of course we get through process, and those have been doing well. So certainly I'm watching China. I'm also watching Sasol. Let's keep a close eye on them. We're not yet saying that anything has happened, but things are looking interesting, and interesting always perks my attention. A reminder, and I mentioned this beginning of actually late last month, I said we were going to be doing a name change on this podcast. It hasn't happened. I promised it for first week of Feb. It's coming. The artwork is taking a little bit longer. It'll be exactly where you always find it. It'll look a little bit different. It's going to be called Simon Shares, because that's a section I've used to use in this podcast back in the days in episodes around 150 through to around, I think, 380. But it'll be exactly the same. In the meantime, Standard Bank is on board, and we appreciate their support. Remember, Power Hour on Tuesday, Rosebank in person or webcast, justonelap.com/events, and we will leave that there for today. If you are loving the show, leave us a positive review and a rating in your podcatcher of choice. When we are 418 episodes in, we get lost a little bit in the hay, but we always appreciate that. My name is Simon. We'll chat again next week. Until then, look after yourself. If you can, look after somebody else as well. Cheers all.